Watch these 5 cryptocurrencies this week: BTC, XRP, NEAR, XMR, Waves. Over the weekend, Bitcoin traded below $40,000 after plunging below the level on March 4th. Despite recent volatility in the crypto market, Glassnode data shows that institutional investors have gradually built up Bitcoin holdings through shares of the Grayscale Bitcoin Trust since December 2021. Furthermore, GBTC's holdings are not being dumped by fund managers in panic. That implies long-term bullishness among fund managers. They are therefore riding out the short-term pain. In a report released on March 4th, Bloomberg Intelligence warned that Bitcoin may remain under pressure if US stock markets keep falling. The report predicted that crypto would emerge a winner in the end. In contrast, if the stock market recovers, Bitcoin may rise at a faster pace if past patterns are repeated. Despite the strong headwinds facing crypto markets, select altcoins are showing signs of life. We will examine the top 5 cryptocurrencies that may benefit from the rebound in Bitcoin. BTC versus USDT. It appears that bears are attempting to gain the upper hand after Bitcoin fell below its moving averages on March 4th. By pushing the price back above the moving averages on March 5th and March 6th, the bulls attempted to trap the aggressive bears. Under conditions of sustained price declines below the moving averages, the bears will attempt to push the BTC/Tether pair toward the support line of the ascending channel. It is likely that the bulls will defend this level aggressively. It is possible that the pair could extend its stay inside the channel for a few more days if it recovers strongly from this support. A breakout above the 20-day exponential moving average, $40,474, would invalidate this short-term bearish view. A break above that level would signal the onset of significant buying down below. In order to reach the resistance line of the channel, the bulls will push the price higher. If the pair breaks above or below the channel, there is a good chance that the next trend will start. On the 4-hour chart, the 20-EMA turned down and the Relative Strength Index, RSI, was in the negative zone, signaling bearishness. Upon breaking below $38,000, the pair may fall to $37,000 and then to $35,500. As a result, if the price turns up and rises above the 20-EMA, it will suggest buying at lower levels, contrary to this assumption. Bullish momentum might begin to build after the pair breaks and closes above its 50-simple moving average. The pair could then rally towards $45,000. XRP versus USDT. Over the past few days, Ripple, XRP, has attempted to break through its downtrend line, but the bears held their ground. Positively, the bulls are still trying to defend the 50-day SMA, 72 cents, which they have not given up. As a result of the flattish moving averages and the RSI near the midpoint, neither the bears nor the bulls have a clear advantage. The momentum is likely to pick up if bulls push and sustain the price above the downtrend line. This may lead to a rally of 91 cents for the XRP/USDT pair. If this level is broken and closed above, we may see a possible retest of the psychological resistance level at $1. Alternatively, if the price slips and sustains below 69 cents, that would indicate that bears are back in control. If that happens, the pair might fall to 62 cents. On the 4-hour chart, the price is currently range-bound between 80 cents and 70 cents. Any price movement above the downtrend line could challenge the overhead resistance at 80 cents. This would indicate that the bulls are in control. Initially, the pair could reach 85 cents, before moving up to 91 cents. The opposite would be true if the price turned down from the moving averages, which would suggest that bears are selling on rallies. The pair could then drop to 70 cents. If this level cracks, the selling could accelerate and the pair could drop to 62 cents. NEAR versus USDT. During the past few days, the NEAR protocol, NEAR, has been positioned between the moving averages. This shows that bears are selling on rallies to the 50-day SMA, $11, while bulls are buying on dips to the 20-day EMA, $10. Based on the RSI at the midpoint and the 20-day EMA flattened out, the bulls and the bears appear to be in equilibrium. It will indicate that bulls are on the verge of a comeback if the price breaks above $12. The near/USDT pair could then rally to $14, where it may again encounter strong resistance from the bears. In contrast to this assumption, if the price breaks and sustains below the 20-day EMA, it will suggest that the bears are in control. The pair could then drop to the strong support at $8. Bullish momentum emerged once the pair broke above the downtrend line, but the relief rally is stymied by strong resistance at $12. The bulls have managed to hold onto the 50 SMA despite the bears pulling the price below the 20 EMA. The bulls are more likely to attempt clearing the overhead hurdle at $12 if buyers push and sustain the price above the 20 EMA. In addition, if the price breaks below the 50 SMA, the selling could intensify and the pair could drop to $9.50. XMR versus USDT. During the past several weeks, Monero, XMR, has been moving inside of a descending channel. The bulls are buying the dips to $134 and attempting to form a basing pattern. For the past few days, prices have been consolidated between $134 and $188. The 20-day EMA, $164, has flattened out and the RSI is close to the midpoint, indicating a balance between supply and demand. Ideally, the equilibrium would shift in favor of buyers if they were able to push the price above $188. That will complete a double bottom pattern, which has a target objective of $242. However, the rally is unlikely to be easy as the bears are expected to mount a strong defense at the resistance line of the channel. As a result, the bears will attempt to bring the XMR/USDT pair down to $134 if the price turns downward and slips below $155. It appears that the bulls were able to push the price above the downtrend line, but were unable to sustain the higher levels. Therefore, they appear to be defending this level aggressively. Moving averages have flattened out, and RSI is just below midpoint, suggesting that demand and supply are in balance. Bears may gain power in the short term if the price falls below $155. On the other hand, a close above the downtrend line may improve prospects of a possible rise to the $188 overhead resistance. Waves versus USDT. During the past decade, Waves has formed a double bottom pattern at $8 and surged to $21. RSI is in overbought territory, indicating that bulls have the upper hand as moving averages have completed a bullish crossover. Although the bears are posing a stiff challenge near $20, the good news is that bulls have not given up much ground. It will signal that bulls are buying on dips if the price moves up from its current level. Retesting $21 is more likely once the price moves up from its current level. Waves/USDT could rise toward $24 and then $27 if bulls are able to sustain the price above $21. It will be invalidated in the short term if bears maintain the pair below $16. RSI dropped from deeply overbought levels to just below the midpoint after the correction from $21. The bulls have taken advantage of the dip to the 38.2% Fibonacci retracement level at $16 and pushed the price back above the 20 EMA. The bulls will attempt to drive the pair above the overhead resistance at $21 if the price sustains above the 20 EMA. In contrast to this assumption, if the price breaks below the moving averages and turns down from its current level, this could indicate that short-term traders are going to exit. The pair could then drop to $14, then $13, and so on.